It's time for the Phil Ferguson Show.
Buongiorno tutti. Hello, everybody. Welcome to the Phil Ferguson Show. I am so delighted that you are here. And again, a special thanks to all the people that keep recommending the show. We get new listeners all the time. And I even occasionally get emails from people that have started listening a few weeks or a few months ago that tell me they've gone back through the entire library, all the way back to the beginning, and listened to every single show. And you need to get something to do with your free time. I don't know how you find the time to do that. I used to listen to more podcasts when I worked for the man and sat in a cubicle farm, but because of my business's growth, I'm on the phone most all day, and I very rarely get to listen to podcasts, but enjoy them immensely, so hopefully you do as well. Later in the show, we're going to talk about past performance and how that data is maybe not useful or maybe even harmful to rely on if you don't understand what it really means. I'm not going to get into that because there's a whole freaking segment just a few minutes away. After that, we have an interview with Billy Bambrough. I keep trying to say his name right. Billy Bambrough. He is a writer and has written for many large magazines, including, I think I found it in Fortune. He was talking about Bitcoin. So we're going to have a little update on Bitcoin and the state of cryptocurrencies and a follow-up to last year's show, which is still by far my largest listened to ever show. That was December 22nd last year, where I put out the show 4 days after Bitcoin almost hit 20,000. And it went to 6,000 and stayed there for a while, and then it went to 5, and last I looked, and what we're going to talk about in the show is somewhere in the low 4s. What will it do in the future? I don't know. It could go back to 20,000 because its price is not based on anything in reality and rationality, in my opinion. But I don't want to spoil all of that, so we're going to talk about that. Another fun thing going on in my life is I spent several hours to drag all the leaves from the entire yard up to the curb, and they're waiting for the city truck to come by on Tuesday, and they got this giant vacuum truck. It just sucks up mountains of leaves, puts them in this big truck. What they do with them after that, I don't know. Hopefully something responsible. Well, the problem is I'm recording this on Sunday, the 25th of November, and we're supposed to get 12 inches of snow in the next 24 hours. I don't think 24 inches or 12 inches of snow is going to melt by Tuesday. Matter of fact, I know it's not going to, because we're going to go into the deep freeze. We're going to have 10 degrees Fahrenheit, which is going to be, about minus 12, minus 13 Celsius. So for a lot of people, that's cold. And for a lot of people who are listening, they laugh at how not cold that is. Well, I think it's cold, and it's starting to annoy me. The older I get, the less I like 10 degrees, let alone minus 10 degrees Fahrenheit. So that's what's going on in my world today. Just keeping busy, keeping the yard upkeep. And now I'm getting ready for the big snow. I'm not going to do my bicycle riding today, because I'll probably shovel the driveway 3 or 4 times so I can do 2 inches at a time instead of all 12 at once, because it's supposed to be a very wet and heavy snow. So people who are familiar with snow understand that. Hopefully you don't understand snow. You live somewhere where it doesn't snow very much, and you just think it's cute. I'm happy for you. Anyway, we're going to take a quick break and talk about past performance, and then talk about cryptocurrencies.
And he's right. It is a miracle. Except when you think about it, it's actually not. It's science, which I'd argue is actually better and more convenient than a miracle, because you don't have to spend the next 2,000 years worshipping the scientists. You can just be like, thanks. And
It's time for a segment on past performance. This is one of these topics that gives me great consternation. I don't know if that's the right word. Concern, problems, difficulties. It causes trouble with listeners, and it also, from time to time, causes trouble with clients. A lot of times people want to invest in what is winning, what is doing great, what they can see from past performance, 1, 3, 5-year performance, what has done really well, and they want to invest in that. It's kind of like a horse that wins a couple of races. One can think it's more likely to win future races because it's a really fast horse. That's not necessarily how investments work. The example I often give, and regular listeners will have heard this before somewhere in the past, I'm sure. If you go into a store and you see a sweater that you really like, you really want to buy, but it's a $100 sweater, and you think to yourself, I don't know if I need that, but I want it. Let me go home and think about it. And you go home and you have a busy life and you forget all about it. You don't think about it anymore. A year later, you're in the same store and there's that sweater still sitting there, but now it's $200. So of course you buy it. No, no one does that. I mean, if it was half the price, you might want it because it still has the same value to you and it would cost you half the price to buy it. But often with stocks, people look at something that doubled or went up 10, 20, 40, 50% more, and they get excited and they want to own a piece of it. Well, if a stock doubled, the time to buy it was before it doubled, because that would have been really cool. The fact that it doubled doesn't necessarily mean it's going to go up anymore. And so one of the phrases I heard many years ago and I like to use is that hot stocks go up and are going to keep going up until they don't. And so it was particularly awesome when I stumbled across this blog post written at Vanguard called Making Decisions Based on Past Performance Works, Except When It Doesn't. So it kind of goes with the same philosophy. And it just got updated in November 19th of 2018. So this is a pretty new update. And like I said, the title is Making Decisions Based on Past Performance Works, and then in parentheses, except when it doesn't. If you search for that and the word Vanguard, you'll find this article. Now, it talks about predicting the future based on past performance, and it has some data about Olympic Games, which I don't care. I don't give a shit. The point is made, but a little lower below is where it gets really good from my perspective, because it talks about stocks and stock markets and mutual funds. And this is very specific to me because every once in a while I run into a client or a potential client that has a handful of funds that have done really, really well. And the idea that they've done really, really well blocks their ability to think about the things that I discuss. I like to think about what has worked over 20, 40, 50 years, not what has worked in the last 1 or 2 or 3 years. Matter of fact, because I employ a little bit of a contrarian philosophy, things that have done really, really well, have done too well, I know from experience, from long-term history, that they don't often repeat. So you don't want to get overweighted. Maybe you even underweight a little bit. Don't get crazy. But it has some data for us that goes right to this topic. And what it has is also a pretty graphic, which maybe I'll put a link into the show notes or put it up on the Phil Ferguson Show Facebook page so you can see it. They looked at all of the actively managed equity funds, stock funds in the United States for a 5-year time period ending December 31st, 2011. And what they did is they looked at all these funds and said, how do they do 5 years later? So here's the breakdown. And they're only looking at the ones in the top quintile, which means the top fifth, the top 20%. So if you have 1,000 funds, they only took the 200 best ones. And then they looked at them 5 years later to see how they performed. 16% performed in the top quintile again. So 16%, that's what, like 1/6 of the funds? So only 1/6 1/6 of all of these funds again won and were in the top quintile. And that's the part that, that's nice and successful. Another 12% were in the second quintile, so from 20 to 40%. 12% were in the middle, 14% were in the fourth, and you're going to love this, 21% were in the bottom quintile. So the funds that had the best performance for 5 years, the next 5 years, 21% of them, 1 out of 5, were in the bottom quintile. Now, for those who are really, really good at mathematics and just hearing it, you didn't even see it, just heard it on the podcast, you might be saying, Phil, that's nowhere close to 100%. That's only 75%. What gives? Well, here's the extra magical thing. 25% of those funds closed. Now, I don't mean they're closed-end funds. They ended. They ceased to exist. They disappeared. And the most common way for a fund to disappear is they roll the money into another fund. Now, this can happen in your 401k or your IRA. It can happen anywhere. Almost every company does it eventually. Some companies do it very rarely. Some companies do it quite regularly. And this is an example where in just a 5-year time period, looking at broadly diversified, actively managed U.S. stock funds, 1 out of 4 of the best, 1 out of 4 of the funds that had the best quintile of performance for a 5-year period, 5 years later, were gone. So you might have stock fund A and stock fund B. Stock fund A does great for 5 years, and then they switch managers, or even if they keep the same manager, he buys a hot stock or doesn't buy a hot stock, and for whatever reason dramatically underperforms the market. The mutual fund company no longer wants people to see the terrible performance that has just occurred for Fund A in the previous 1 or 2 years, even though their 7-year history might be great now, because they had 5 really wonderful years, which may have been just random chance. No better than chance, at least. Now they've had a couple terrible years, and advisors that are out there recommending funds to people no longer recommend Fund A. Because if you look in a year where the market goes up 20% and Fund A happened to make 8, when you recommend that to clients, they might look at you and go, what are you doing? This thing made 8% last year. And so now past performance kills this fund. And the mutual fund company can't get new investors, can't bring in money. But Fund B is doing something completely different. And for the last 2 or 3 years, it has done really well. So they tell everyone that's in A, hey, we're rolling you into a better fund. And so all of your money transitions into Fund B. So you no longer own Fund A. You now own Fund B, which may have a slightly different strategy or can have a significantly different strategy. And of course, you can sell that and buy something else. And if you're in a taxable account, you may create a tax consequence. It's not anything that you wanted to do. It was imposed upon you, and this is perfectly legal to be done. So Fund A closes, liquidates, or merges into Fund B. Fund A now no longer exists. So when that company reports to the public or creates marketing materials, they can say, hey, we have Fund B that's done great, or 75 or 80% of our funds beat the benchmark, or 80% of our funds are 5-star rated from Morningstar. Not that that matters, but people don't know how that works. They don't understand what that means. It sounds good. So they want to be able to present you something that sounds really good. I recently had someone contact me, and they were able to make important decisions about their investments because of a segment I did like 6 months ago on American funds. Now, American funds are actually pretty good in the whole category of things that you can do that are terrible. American funds is pretty good, but they had come out with advertising, and some of it they sent to me, that showed, or the basic concept was, if people say you can't beat the index, well, we have. Yeah, if you go back 25 years and had a couple really great years, they did, but since then they haven't. And so here is another example of this data from Vanguard. I told you it's in this blog post. if you look at only the top 20% funds and invest in them, there's only a 6% chance in the following 5 years that you're going to be in the top 20%. There's a 25% chance that your fund is going to be closed or it's going to end and its data disappears unless you have access to a research database, because the public information, they don't have to report it anymore because it doesn't exist. So there's a very small chance that you'll win again, and there's a moderate chance that you'll have average performance, and then there's a decent chance that you'll have underperformance or your fund will close. So this is one of the problems with past performance data, is it doesn't give you a good source of information of how you're going to do in the future, which is okay, and most people accept that. But where it can really cause harm is when you think that it does, and you have mutual funds that have done really well, and you don't want to sell them, or you don't want to diversify them into a broadly based index portfolio like I recommend, because it's been winning. So there's a good chance over the next 5 years that the things that you held on to because they had done so well don't do so well. And there's a good chance, based on the historical data, based on statistics, based on probability, that you're going to underperform the index. But emotionally, it's really hard to sell mutual funds that are winning and take funds that only, air quotes, radio air quotes up, only match the index. But going in the future, I know that the index fund is likely to beat the vast majority of all managed funds because that's what they've done over a really long period of time. So that's some of the risks and concerns about past performance. It's not a reliable way to figure out what to invest in. So just be aware of that, and we'll get on with the show. All right, everybody, welcome back. Of course, you are still listening to the cleverly titled Phil Ferguson Show. With me today, I have Billy Bambrough. Is Bambrough? How am I still supposed to say that, Billy? You told me earlier.
Bambrough is very close for an American pronunciation. They usually do go with the Bambrough style.
Yeah, I speak American, not English, so you have to forgive me.
That's very true.
If it was Italian, I might be able to nail it because I speak Italian also. But Bambrough, yeah. Bambrough. I just talk like I'm Benny Hill, and I'll be okay.
I think that'll close enough.
Yeah. So you're in England now.
I'm in London. Yes. Yeah. I'm born near London and currently live in London. Have done all my life. I've been over to the US a couple of times and elsewhere around the world, but I call the UK home. Yeah.
Very nice. And it wasn't the purpose of the interview, so I'm gonna jump the shark here a minute. What do you think about Brexit?
That's a very good question. It changes almost every day. I didn't vote for Brexit. I wouldn't have chosen for it to happen. But it did happen. And now we've kind of just got to get on with it, in my opinion. I think there are certainly a lot of parallels with the situation in the US with Donald Trump, and that it has divided the country in a way that, nothing else has in recent times. And it's becoming an increasingly difficult thing to bring the two sides together to find any reasonable solution, because it just evokes such visceral reactions from people who think that the other side are utterly insane and refuse to have a conversation with them about it, and think that because of what they're doing, it's destroying the country for the foreseeable future. So it's politics and democracy at its absolute worst, because when you have two sides that just cannot come to agreement, it just shuts down the whole system and it clogs up everything. I don't know if you've been to the UK within the last 2 years, but it's almost like there's nothing else happening. I don't even know what any of the government's other priorities are right now. There just aren't any. It's just all Brexit all the time. And frankly, it's a complete waste of time, because I realistically don't see how it will very much change our situation at all.
Wow.
So I'm not a big fan of Brexit, but it's the situation we're in, and personally, I think we need to just get on with it and sort it out as quickly as possible to get on with the rest of our lives. Really,
it sounds straightforward, but who knows? Yeah, the only time I've been in England, Great Britain, UK, because I'm never sure which parts to call what.
They're interchangeable.
Yeah.
Pretty much. Don't say England to a Scottish or a Welsh person. Irish.
Yeah, Welsh. My brother's wife is Welsh, so I know about that issue.
Right.
But we were there right in between the middle of the Olympics and the Jubilee.
Okay, that was a good time. I think that was quite a positive time.
Well, we got there because when we planned our trip, we didn't know about either. So if we had gone a couple weeks earlier or a couple weeks later, it would have been mass humanity and insanity. And we were in between the two events, and it was quite delightful.
Yeah, well, that's certainly two very big events that will be long remembered over here. So
Well, and
I think well timed that you didn't land right in the middle of one of them.
The highlight for me is I finally understood why you have the phrase "mind the gap."
I mean, because of the using it on the tube trains?
Yes, because see,
right.
Every other subway or tube or metro that I've been on, at least for a station is concerned, where you're getting off of the train, it's in a straight line. The train is,
Yeah.
And in the underground, in the tube, some of the stations, the cars are going around a curve, so the space is not uniform, and you can have a pretty generous amount of space between the train and the platform.
Yeah. For children and little old ladies, there's certainly a very real danger of actually falling right down there. So you got to mind the gap.
At least a foot can fall in, and that's a problem if the train wants to start going. So, good fun. But I found you because I stumbled across an article that you wrote for Forbes, and this is not what we in America have shared with the world. Fake news. It's Forbes, right? And you're writing about cryptocurrency, and my regular listeners know about a year ago, I did 2 one-hour shows on Bitcoin, and I did the shows went out 4 days after the peak of Bitcoin, when it was about $20,000 a coin, where I basically took the position, and I don't know exactly what your position is, so we can have an intelligent discussion if we disagree. My position was not only is Bitcoin not going to work, it can't work. And I told anybody that had any, get out, get the hell out. Oh, by the way, you can swear on my show. Get the fuck out, sell any and all cryptocurrencies, and run for the hills. In the last 12 months, Bitcoin's gone from 20-ish to, it went to 6 for several months even, but suddenly it fell, and you had a story about that. So get us up to speed on anything that I missed, that story, what your thoughts are. It's pretty open here.
Well, I think certainly you've got the outline there of this year. The price of Bitcoin specifically, and for most other major cryptocurrencies, peaked in either late December or early January of this year. And as you say, hit that ridiculously high, near $20,000 per Bitcoin. This year so far, at least, the Bitcoin price has been falling pretty steadily. It was kind of flat for a few months between September and early November. It was more or less flat and was about $6,000. A lot of analysts were throughout this period warning that this kind of stability can only mean some kind of incredible instability coming the Bitcoin's way very soon, and that has proved to be accurate. But with Bitcoin, I mean, over its 10-year history, it has proven to be incredibly volatile the whole time. So, kind of that's almost like just predicting winter is coming. Of course, it's going to come eventually. So I don't know how much credit analysts deserve for that one. But I think your advice to people of if you've got any, probably not a great idea to hold on to it. I've been following the Bitcoin industry since about 2012. So, late to the party in some ways, early to the party in others. But certainly if you bought Bitcoin way back then, when it was, I think, for about $300 per Bitcoin, you'd still be sitting on a very tidy profit, possibly more than most other stocks and shares and other investment things you could buy. But certainly if you bought last year, certainly in the last 6 months of last year, you'll be looking at some losses about now. But that is the only time in Bitcoin's 10-year history that if you bought, you'll be in the red. If you bought any other time, you'll still be in the green. Not as much in the green as you would have been in December, but you'd still be doing okay. But that is absolutely no guarantee that you'll still be doing okay tomorrow, because and Bitcoin, I think, is the best example of this. The experts do not know what it's going to do. Anytime anyone makes a price prediction for Bitcoin, they're guessing. They're using what information they have, and it's an educated guess, but it is very much a guess. No one knows what it's going to do. A lot of people hope that it's going to go a certain way, and they bet that it is. And when people talk to the media, they generally have a stake that they want it to move in, but they realistically have no idea which way it's going to go. So Bitcoin could tomorrow or next week or next month fall to zero, or at least close to zero.
Yeah.
Or it could go to $50,000. I mean, it's perfectly possible, but you've got just as much chance of going down to the local casino and putting all your pay for the month on red or black, or a game of blackjack or poker, and walking away with the money and then telling everyone how you made it rich and they should do the same.
Sure.
So there's no realistically way financial advice in this area is not worth listening to at all. You might win, you might get lucky, you might make a lot of money, but that's not really repeatable or good advice to give to anyone else, in my opinion.
Sure. Now, do you currently own any cryptocurrencies?
I don't know.
Okay.
I did last year. I became an uncle for the first time, and as kind of a tongue-in-cheek gift to my brother, his new wife, and their son, I set him up, my nephew Benjamin, with a Bitcoin bank when he was born, and put some into there for him, which obviously one day could be worth a lot of money and maybe would pay for him to go to college or something, but could also be worth absolutely nothing. And it's certainly not a very large amount.
Sure.
I mean, it was just a funny kind of gift.
Yeah.
I thought was a good fun thing, but it was relatively very little.
You didn't buy 20 coins or anything.
Zero, then that's fine.
A couple of other fun little semantic games I like to play with people about Bitcoin, and I want to get your thoughts. And the real fun part for me is I don't know the answers that you're going to give. So do you consider cryptocurrency an investment?
No, I don't. I know a lot of people do, and that's why a lot of the interest around Bitcoin is because of all the people that have got rich quick from investing in it. But it shouldn't be an investment. Bitcoin is at its heart, and most other cryptocurrencies are the same. They're practical tools. They're internet cash. In the same way that you don't go and get all of your cash out of the bank and leave it under your bed, you wouldn't go and get all of your money out of the bank and put it into Bitcoin. Because holding this version of cash, digital internet cash, is kind of stupid, because if something happens to it, you've got no way of getting it back.
Yeah.
If you leave it with a Bitcoin exchange, and that Bitcoin exchange has either some IT problems or gets hacked, or someone at the company just decides to run away with your money, you've got no way of proving that Bitcoin is yours. If you don't control the private keys, which is the cryptographical numbers that allow you to move that Bitcoin or other cryptocurrency, then you've got literally no way of proving it. You can't go to the police and say, I lost this money, can you get it back for me? They won't be able to. It's not possible. And in the same way, if you have a suitcase full of cash and some guy on the street corner offers to look after it for you, and you say, yeah, sure, here you go. And he gives you a bit of paper saying, if you want it, come back and see me. And then you try and go back and see him and he's just not there anymore. You've got no way of getting that cash back. And it's exactly the same as Bitcoin. It's not worth, and it's not designed for people to hold large amounts of it at any one time.
Yeah.
It's meant to be used as a way of moving value across cyberspace.
I recently
If I want some Bitcoin, I'd buy some and then send some to you, Phil, perhaps, if I needed to send some to you. But that's it. You get as much as you need when you need it to do what you're trying to do with it, and that's it. And there's no point holding any more than that.
I recently had a little Twitter conversation, which is always dangerous, at least from my perspective.
Absolutely.
Intelligent conversations do not generally happen on Twitter. And the person said, because I hold the position that Bitcoin and all cryptocurrencies are not investments. So we agree, which is always cool, but I didn't know that in advance. He said that cryptocurrency is an investment because anytime you can buy something and sell it for a higher price later, it's an investment. And so my first thought was, how do you know that you're going to buy it and sell it for a higher price later? So without that magical knowledge, you must then allow for the possibility that you could buy it and sell it for a lower price later. And he says, well, yes, both of those situations, it would be an investment. And I said, okay, if that's the definition that you're going to give for investment, then I could buy a pair of socks and sell them for a lower price later. Would socks then be an investment? And he didn't want to talk to me anymore.
Well, I mean, I think you're both right in a way.
Yeah.
He's just right in that kind of stupid technical way. But yeah, sure. By that definition, anything is an investment if you want to say it that way.
Exactly. Now,
but it's not useful to the conversation. It doesn't help people understand it better. So it's being a bit obtuse. But I think you are very correct in really what we're saying, and the word we're excluding there is Bitcoin is not, or cryptocurrencies are not, a good investment. It's not a sensible investment that you can take investment or financial advice on. So yeah, it's an investment in the same way tulips, which Bitcoin is often compared to, could be considered previously in the tulip run an investment, but they weren't a good investment.
I'll resurrect my joke from last year. You know what the difference between a Bitcoin and a tulip bulb is?
I don't know.
One can provide a flower.
Very good.
So I say it's not an investment. We could massage the definition and say it's a shitty investment. Fair enough. Is Bitcoin itself, is it a currency, or would you go with more along the lines of your description a moment ago of it's a method of transferring value?
Yeah, I think it's a difficult one because I don't think we've really got a word in the English language that particularly fits for Bitcoin. Currency is pretty close. Commodity is pretty close, but neither of them are quite right. And it's something new. So it doesn't really conform quite to those things. The most similar commodity could be considered gold, but gold is not really transactionable at all. It's very hard to give someone gold. You can't divide gold. It's hard to transport gold. Gold doesn't really work for transferring value in a very easy way on kind of a day-to-day basis. If you just want to, buy a new pair of jeans or something, it's no good for that. But it is a very good store of value. As a currency, Bitcoin doesn't have any of the things that, or some of the things that you need in your currency. It doesn't have stability. It doesn't have ubiquity. It doesn't have that backing from a central authority that says it's going to be worth the same thing tomorrow as it is today, or roughly. So it's not really that either. It certainly has a use, and many people around the world have over the last 10 years used it for a lot of things. So there is a use case there. People are still kind of trying to figure out exactly what that use case can be. And I do think we're in that situation where, much like we don't have a word for it because we don't understand quite the problem that it's going to solve. Yeah. I do think that that's going to change quite a lot. And a very common similarity or comparison that's brought up when talking about Bitcoin is about the internet in the 80s and 90s. It would have been very hard in the 80s and 90s to predict something like Snapchat or Twitter or even things like internet banking and many things that we use the internet for as on a daily basis now would have been really hard to understand then, when the internet was mainly just used for universities sending research pages to each other and talking to each other, and by big institutions, and certainly not by almost everyone in the world having multiple devices connected to it. And I think if you'd have suggested it to people, then they would have said, no, that's impossible. The World Wide Web isn't capable of supporting that. And obviously what we have now is a very different network to what existed then. It's grown and evolved and changed. And I think the Bitcoin network and other cryptocurrencies as well, I think I'm a big fan of Ethereum, which is a cryptocurrency and decentralized app network that's similar to Bitcoin in a lot of ways, but much more about different applications running on top of it. I think these things will continue to grow and change and evolve and allow people to use them in different ways that at the moment are very hard to understand and predict. But I do think it will change the way things are done, especially in the financial space.
Fair enough. Now, we do know that Bitcoin hovered around $6,000 for several months. In the article that I first read from you, it almost spontaneously, within minutes, if not a couple hours, went from 6 to 5, and now a couple days after this, it's dabbled with the low 4,000. What has spooked this? As much as one can even know what affects prices of something like this, what are your thoughts?
So what this big change has kind of been blamed on, if blame is the right word, is a fork of Bitcoin called Bitcoin Cash, which was split off from the original Bitcoin network and blockchain last year. This was because some developers and miners who, for want of a better word, control Bitcoin, they couldn't agree on the direction to take it. Some of the developers and miners wanted to make the block size larger and allow more transactions to be recorded within each new block that was mined on the Bitcoin network, to make it easier to make payments. Other people didn't like this because the changes that were being made were they saw them as too soon and too untested, and they weren't sure of the effect it was going to have. So some people wanted more immediate change, other people wanted more cautiousness. The two different factions split off, and one became known as Bitcoin Cash, and the other remained being called Bitcoin. Now, Bitcoin Cash this year has had a civil war of its own, and as a result of that, last week split in two again, becoming Bitcoin Cash ABC and Bitcoin Cash SV. These two sides are generally not very nice people and haven't handled the situation very well, and it's become a little bit messy. And there is a lot of, we talk about these things as not being investments, but for some people they are, in the sense that they've made an awful lot of money and they've become very rich in a relatively short amount of time because of them. So just like some gamblers do very well, some people have done very well from these things. It's not advice to start doing it, but obviously it has worked for some people. Because of this civil war in Bitcoin Cash, it's required a lot of miners to these are the people that get very powerful computers to solve mathematical problems on the Bitcoin network to create new Bitcoin or other cryptocurrencies. Because of them doing this, and because of particularly one guy called Craig Wright, who is the leader of the Bitcoin SV faction, threatening to sell all of his cryptocurrencies, and he has quite a lot of them. It's triggered this sell-off and that spooked the market and sent really the value of almost all cryptocurrencies, apart from one, Ripple, down quite considerably. This was the instigating thing that happened last week, and then towards the end of last week on Sunday, and then the market kind of picked it up Monday morning. One of the big exchanges based in Hong Kong called OK Exchange, because of this difficulties between this fork of Bitcoin Cash, they were unsure how to handle some of their futures contracts, and the market got very worried because it thought that the exchange was going to start changing these futures contracts and not paying out. So a lot of people then sold very quickly, and because of the annoying nature of online and digital exchanges, people have automatic sell orders set up. So if the price falls to a certain level, the computer algorithm and program kicks in and sells for them without them actually doing anything. And this has been a problem in the traditional financial industry over the last few years, causing things called flash crashes. But the financial industry, because it's a lot more careful about these things, has built in protocols to stop this happening if it suddenly happens, and it will just prevent all future trades happening for 30 minutes or for a couple of hours, to let the market calm down and let people process whatever information is happening, to stop these kind of very rapid sale crashes. Right. Bitcoin and other cryptocurrencies have none of this because no one's in charge. It's just an actual free market where you can.
I just want to interject a little bit for the listener. If we're using a lot of words that are going to be gobbledygook, complete nonsense to the average listener, you can go back to the double show that I did on December 22nd of 17, where I spent 2 hours going over a lot of these words. That will help. You may want to go to something like Investopedia and look up some of these words. Because this is not the show where I'm going to go redefine everything. So if you're up to speed and you're keeping up, cool. If this has gotten to the point where it makes no sense whatsoever, it might be that you don't know the language, or it might just be that it doesn't make any sense. But
definitely some of that.
So I was wondering if you happen to know, a year ago, maybe a year and a couple of months ago, when Bitcoin crash, Freudian slip, Bitcoin Cash, you have, on one day, you have a block of Bitcoin.
Yeah.
And the next day, you have a fork where you have Bitcoin and then this new Bitcoin Cash created spontaneously out of, I don't want to call it the ether because that's going to cause confusion, out of nowhere. You now have two cryptocurrencies, hence the hard fork.
Yeah.
At the time that Bitcoin Cash appeared, did the value of Bitcoin go down at all?
I honestly can't remember. Okay. I think it did not.
That's my recognition, and it leads to one of these weird things that if the value of Bitcoin is in any way tied to its limited quantity, at its scarcity. That's the word fancy word I'm looking for, scarcity. You had a situation where you basically doubled the supply of coins in total. Bitcoin did not go down, and Bitcoin Cash suddenly had value. In this case, when Bitcoin Cash split up, do the two parts, the Bitcoin SV and the Bitcoin ABC, are they worth an equal amount to what Bitcoin Cash was, or has once again value created out of thin air?
No. So even last year, when the fork happened of Bitcoin and Bitcoin Cash, there was no creating of value out of thin air. If you held Bitcoin in an exchange wallet, that's something like Coinbase or Binance, or there's other exchanges are available. If you held your cryptocurrency in one of them and a hard fork happens, almost always, if it's a major exchange, they will divide it because, and the technical aspect could get very technical here, so I'll avoid that and you'll just have to take my word on it. But there isn't any new value created. So say if I held one Bitcoin at the time of the the split last year when it split to Bitcoin and Bitcoin Cash, then I would be holding, say, after that fork had been completed, which can take, a number of days depending on how the miners decide to direct their computing power into which fork, until there's what's called consensus, which is until really the whole thing has died down and everyone's just getting on with it. It would change to me holding 0.6 Bitcoin and 0.4 Bitcoin Cash, hypothetically.
I see. So
it wouldn't ever be value created out of thin air.
Fair enough. I appreciate the correction to my error. But you, as an owner of Bitcoins, as an individual person, you have no control over that. It just is something that happens to you. Yes,
exactly. So I mean, there is a wallet that I had, because I've got a few, just because over the years, they're free and easy to set up. And there was one that I hadn't used in a while, and I logged into it, and I had some Bitcoin Cash, whereas I've never consciously or on purpose bought any Bitcoin Cash, but I had some because there was a very, very small amount of Bitcoin still sitting in this wallet that was left over from before the fork. So they had just divided it up and allocated me that Bitcoin Cash that was the percentage of my original Bitcoin that I had at the time.
Trippy. Now, one of your most recent stories from earlier today, at least in my time, talking about Norway and electric subsidies. Walk me through that.
Yeah, so Norway has been relatively encouraging of the cryptocurrency industry in recent years. They seem to have taken a bit of a step back from that lately. I've been talking to people on this all day today and trying to figure out really if it's a good thing or a bad thing. It seems to be, and this is from a source of mine in the country that isn't really connected to the Bitcoin industry at all. He's the one who actually flagged this story up to me originally, because it's only appeared in local press and I wouldn't have come across it. And he thinks it's kind of less about the Bitcoin or cryptocurrency or blockchain industries, and it's more about a political move just to try and to show the government is doing things to encourage environmentalism, and to say that this industry is creating, the Bitcoin industry is creating a lot of energy use, and it should probably not be doing that as cheaply as it is, and the government shouldn't be giving them free money. But Norway has today decided to end the subsidies for electrical power going into Bitcoin miners. Previously, they kind of paid almost no tax on how much electricity they used in the data centers to mine, to create the Bitcoin. And from January, they will have to start paying more. I mean, this could be for some of the Bitcoin miners in Norway, and there are quite a few there because of the renewable energy, and because of there's one that I'm familiar with that's based in a mine underground that uses this fjord that's above it to cool down their computers to save energy and costs that way. So it could cost them quite a lot more money. I doubt it would be enough to require them to shut down, but certainly it will mean that profits are more squeezed than they have been, even as a result of the massive price sell-off over the last week or so.
Yeah, it's a very weird reality that people are buying these incredibly high power computers, video card processing chips, systems, paying tens of thousands of dollars for some of them, networking them together. They have so many of them in a small space that it creates heat problems, and it consumes a phenomenal amount of electricity just so from time to time, the pool that they're in, they can share a fraction of a coin.
Yeah, that's exactly it. And it's almost mind-bogglingly stupid.
Yeah.
And it's, it's part of the disconnect we still have and the almost illusion that we tell each other that the internet world, the cyber world, isn't the real world, so we shouldn't be spending any time or money or resources on it. I think this is kind of a way of thinking that we need to get over. It's something that exists a lot in the media world as well, and it's why newspapers are still around, because we feel like as physical things they should be more valuable than they are. There's no reason why you need to read a newspaper physically, or almost ever these days, but they still sell far more than really they should do, because people give an awful lot of importance to physical things when the digital thing works just as well and is just as easy to read or whatever. I mean, I very much accept that some people do prefer reading physical print things, but they have almost no practical use over the digital version. But we see them as much more important if it is there in the physical world, and that somehow gives it a lot more weight and makes us like it more in a way, and find it more valuable. And I feel that this is part of that problem, that we still keep this digital cyber world at arm's length, because it's not the real world, even though people's entire lives and business and friends and almost everything that they think of as important in their real world can exist almost entirely just online. And in the digital world, we still don't give it the same kind of value and credibility as we do to things in the real world. I mean, things for example, gold mining is incredibly bad for the environment and has been for a very long time, but no one would ever suggest we just don't do it, because that's somehow allowed because you're physically doing something and you're physically creating something, even though for the most part gold is just this lump of metal that changes hands in metal exchanges, and yes, very much does have a practical use in jewelry and electronics and things, but far less so than the amount of gold bars that are just sitting around basically unused, but just as a store of value and passed back between traders and investors and things. So it's a very strange situation where all these people around the world are spending huge amounts of time, energy, resources, money in creating these Bitcoin things. I don't know if you've ever seen any of these Bitcoin mines, but they are. It's very surreal to walk into a room and you've just got racks and racks of computers all stacked up, and they're all they do all the time. All this sort of phenomenal amount of computing power, way more than even existed on the planet 10 or 20 years ago in this one small room. All it's doing is solving these mathematical equations to create this digital coin out of thin air.
And of course, it's a diabolically complicated calculation because so many people are trying to solve it. So to me, it's like a dog chasing his tail, and the dog has the ability to go faster and faster until he approaches the speed of light, and it disappears. But here, the more people that try to mine it, the harder the solution has to be, because at least for Bitcoin, it's once every 10 minutes is the target for solving a block. And so it gets harder. And so more people try because it becomes more valuable. And so that's one of the things, at least for Bitcoin without modification, cannot succeed, because as it scales, if it was commonly accepted, there is no way to process the transactions fast enough. And then if you find a way to transact them fast enough and they become more valuable, we would have to use more electricity than is currently available worldwide to simply do something that we now do by handing our credit card over.
Yeah, I mean, it's in a way I agree with you, but you could have said the same thing 5 years ago, but then here we are.
Yeah.
And I would expect, you can say that now, but I expect in 5 years' time there'll still be people that are doing this, and in 5 years after that there'll probably still be people that are doing this. It's the supply and demand kind of relationship between Bitcoin miners and the the Bitcoin they create does work very well. As the price goes down, miners who have more expensive costs turn off their machines. Miners who are doing it cheaper and can continue running longer leave their machines on. And so it becomes less difficult as miners turn off their machines. But then the price changes because of that.
Yeah.
And so if it goes back up again, then they switch them back on again. It's very much like, I don't know how familiar you are with the shale oil industry in the US. That has just very much changed the global oil market. And now suddenly, almost out of nowhere, the US is the largest producer, or nearly the largest
we're
producer.
Number one.
You're number one now, I think, yeah.
Yeah.
But if the price goes down to an extent that it's no longer financially sensible to keep drilling for oil in this way, because it is certainly more expensive than, say, it is for the Saudis or the Russians, then the shale oil miners in the US just switch off their machines and they wait for the price to go back up and they flick them back on again. They aren't like the old-fashioned offshore rigs or the desert rigs or the Russian Siberian rigs that once they're up and running, you've kind of got to keep them running. But these shale producers are very capable of just turning them on and off whenever it makes financial sense to do so. So it changes the industry in a big way, because you have a lot more versatile and volatile supply that can come and go. And in a way, this can be very good for the oil price, because it means that it can move with demand. And in the same way, the Bitcoin network will do the same thing of at times of low demand. If people aren't either using or buying Bitcoin, then there will be fewer people creating it. In times of high demand that we saw last year, a lot of miners suddenly come online. It was a bit different last year because a huge amount of new miners were set up that had all these additional costs of initial setup. But in oftentimes they will be able to just come and go on and off as the network and the economy, the Bitcoin economy, requires them to do so. So I think it's certainly going to be very different how it works in the future. But in the nature of predicting things, it's I certainly wouldn't be able to say exactly how it will look. I do expect it to continue, and people, for all the madness of it, they will continue to do this.
Well, I think as long as people
I don't know what it'll look like.
As long as people can make money doing it, they will continue.
Exactly.
And I think the average person will continue slightly beyond the point of being able to make money in hopes that they will be able to make money again.
People like to throw bad money after good money.
Well, I mean, you've already got the equipment and the setup, and you're paying rent, and you've got a 1-year lease. You wait a few months, or you get something like this in Norway where there's a rule change, and in your article you said it costs $7,700 per coin to mine, and we're using English words in new ways here. But if they're transacting on the market for $4,500, congratulations, you can make it up on scale. So every time you mine a coin, it costs you over almost $8,000. Every time you sell it, you get only $4,000. At some point, you're going to run out of money. And
yeah, exactly.
And you're involved in this process of ripping through phenomenal amounts of electricity and energy and possibly carbon dioxide creation as a result, some way, somehow. And the net result is you just made yourself broke. It's just very bizarre. I didn't know if we wanted to keep going, if you had anything to wrap up with. What do you tell the listeners? What should they do? Should they buy some just so they're in the game, or should they avoid it until it settles out?
I mean, I would never recommend buying it just so you're in the game, because I would never recommend holding it at all. I would recommend checking out an exchange. If you're in the US, Coinbase is a very popular one that make it very, very easy to do. But I mean, you can check out some other ways of doing it as well. Localbitcoins.com is much more of a kind of Uber for Bitcoins, where it just matches buyers to sellers if you want to buy some that way. Just buy a very small amount, like $10 worth or something like that. Get the app, the wallet on your phone. Maybe send it to someone else, see how it works. Maybe if you've got a friend in another country, that if you ever send money to them, you could try sending it this way and they can convert it back. I do get paid in Bitcoin by some people that I do freelance work for out in Japan. When I initially started doing it, they said, we can either pay you by bank transfer, it'll cost X number of fees and take 10 days, or we can just send you over some Bitcoin. I was like, yeah, just send me the Bitcoin, because it's easier and it's cheaper. Yeah. And I can then do what I want with it when it's Bitcoin. I can either transfer it straight back if I'm worried that the price is about to go down, which I always do, because otherwise it just makes me nervous. And I can if I want to send it on someone else in another country or somewhere else, I can do that as it's Bitcoin, which is, there are some fees attached depending on how you do it and which exchanges you use and things like that. But oftentimes it is cheaper and quicker than other forms of international payments. So that's a way that people certainly might be able to find some use for it. But I would, check it out and have a read about the basic technology. There's so many good explainers online now. If you just Google, what is Bitcoin, or how does Bitcoin work, or what is blockchain, the technology that Bitcoin runs on. So, see if you find it interesting. See if it grabs your attention. Is what I'd recommend. I wouldn't recommend sticking your savings in Bitcoin or maxing out your credit card on Bitcoin. Absolutely not. There are plenty of reports of people having done that last year and previously, but not a good idea. Well, but yeah, I'd say it's still an exciting technology, and I think it's going to do big things.
I think it is interesting. I can see value in the concept of the blockchain, but I will take a little more firm stance with the listeners and say, do not buy any Bitcoins, period. Do not buy any cryptocurrencies. If you're doing some kind of thing like you are, where you have an international freelance work and you want to expedite payment through a low friction system, a cryptocurrency might be the way to go. So it's not that it's without value. I stand by my position that it is not an investment by the standard definition we use of investments, and it is a shitty currency, but it is a reasonably good way to transfer value from one place to another, but then get the hell out and get your money and collect it in your local currency.
Agreed.
Excellent. Well, Billy, and again, let me see if I can do this. Bambrough,
that's it. Spot on.
I'm working on it. Thank you so much for spending time and coming and visiting with us here on The Phil Ferguson Show.
Thank you for having me, Phil. It's been a pleasure.
Jesus says that he speaks in parables because the people, they just don't understand anything else. But the parables are often foggy and meaningless, and Jesus is snippy when even the disciples don't get them. He says to them, if you don't understand this parable, then how can you understand any parable? And are you incapable of understanding? I kept thinking, don't teach in parables then. It's not working. Even your staff doesn't understand them. Why don't you just say what you mean? Okay, so Jesus isn't so patient, and I think he picked a very ineffective lesson-giving technique, and he's angry most of the time, but that doesn't make him bad. It's just, wow, I really expected someone else. Some of the parables are not just foggy. To me, they're sort of offensive. Like in Luke, Jesus helps us understand God's relationship with humans by telling us a story about how God treats people the way people treat their slaves. They beat some more than they beat others. Okay, I know this was a different time and everything, and I really tried to keep that in mind as the Bible refers to slavery all over the place. And not only does it not say it's wrong, I mean, the Bible gives you advice about how you're supposed to keep your slaves and how slaves should behave obediently at all times to their masters. But I don't know, I guess I sort of thought the Son of God would say slavery was wrong. But no, Jesus does not say that. In fact, he uses slavery as an example of how God treats people. It was really hard to stay on Jesus' side when he started saying really aggressive, just hateful things. Like in Luke chapter 21, Jesus says that he is like a king who says, anyone who does not recognize me, bring them here and slaughter them before me. Or in John chapter 15, Jesus says, anyone who does not believe in me is like a withered branch that will be cast into the fire and burned. In Matthew, he says, I come not to bring peace, but a sword. And in Luke, he says, and if you don't have a sword, sell your clothes and buy one. Then Jesus just starts acting downright crazy. Like in Matthew chapter 21, when this fig tree doesn't have a fig for Jesus to eat, he condemns the fig tree to death. That's right, Jesus condemns a fig tree to death. Not a parable, by the way, just Jesus pissed off that the fig tree didn't have a fig for him to eat when he wanted one. Not exactly the Prince of Peace who taught us to turn the other cheek. And then there's family. I have to say that for me, the most deeply upsetting thing about Jesus is his family values, which is amazing when you think how there's so many groups out there who say they base their family values on the Bible. I mean, he seems to have no real close ties to his parents. He puts his mother off cruelly over and over again. At the wedding feast, he says to her, woman, what have I to do with you? And once, while he was speaking to a crowd, Mary waited patiently off to the side to talk to him, and Jesus said to the disciples, send her away, because you are my family now. Matthew, Mark, and Luke all tell this exact same story, but Mark actually tells us why Mary was there to see Jesus. He says Mary came to see Jesus to restrain him, because the people were saying he's gone out of his mind. I kept thinking, yes, let's go get Jesus and get him some help.
You're listening to The Phil Ferguson Show.
Again, I'd like to thank you for listening to The Phil Ferguson Show. And, of course, thank you to those who share it to your friends, coworkers. No, it's not for everybody, but we're having a great time. We're learning a little bit about how to invest. Hopefully, I can help you with that. And maybe we're learning a little bit about how we can all protect each other's rights to think and do and believe whatever we want. That's very important to me. Of course, I think that religion is hooey, so that's kind of the perspective I'm coming from. I respect your right to your religion. I don't necessarily respect your religion. If you believe something stupid, I'm going to call it stupid. So, don't have any reviews this week, so Phil is sad. If you can go to iTunes or to Stitcher and leave a review, it helps the show be attractive to new listeners because they look and they go, wow, look at all those 5-star reviews. This show must be really good. So that's something you can do to help me out. I don't have a Patreon page on purpose. I do not want your donations. I might want your business if you have at least $500,000 and are looking for some assistance with your finances. And, of course, I do look forward to seeing you. I will be at the American Atheist Convention in Cincinnati. That is April of 2019. Maybe we'll have someone on from American Atheist soon to talk about all the cool shit that's going on. And hopefully I can see you there. Until then, ciao.